In this lesson, how to use parabolic SAR, the learning objectives are: you should know how to calculate the parabolic SAR, you should know different strategies to use to help you trade using the parabolic SAR indicator, and you should know the pros and cons of the parabolic SAR. The parabolic SAR is a technical indicator that determines the direction that a pair is moving. Like any other trend indicator, the parabolic SAR is also a lagging indicator. It means that it works mostly on rising and falling markets during strong trend environments. The indicator is also referred to as a stop and reverse system, which is abbreviated as SAR. It aims to identify potential reversals in the price movement of currency pairs. It can also be used to provide entry and exit points. It is very important you understand the indicator's capabilities and power. It is recommended traders first establish the direction of the trend using the parabolic SAR and then use alternative indicators to measure the strength of the trend. This indicator is not as reliable in a flat or ranging market. The parabolic SAR uses the highest and lowest price as well as the acceleration factor to determine where the parabolic SAR dot will be placed. The formula for the parabolic SAR is as follows. Uptrend parabolic SAR is equal to the prior SAR plus the prior acceleration factor, or AF, which is just the prior extreme point minus the prior SAR. The downtrend parabolic SAR is equal to the prior SAR minus the prior acceleration factor, with the prior SAR minus the prior extreme point, where the EP is the extreme point in a trend, the highest point reached by a price during an uptrend, or the lowest price reached during a downtrend. AF is the acceleration factor, which is initially set to a value of 0.02. It's increased by 0.02 each time the extreme point is recorded, so each time it goes up or down with a maximum of 0.2. Traders can choose the acceleration factor depending on their trading style or the currency pair being traded. Results obtained from the calculations above create a dot that is plotted against the pair's price action, either below or above it. The dots help to determine the current direction of the price. So let's look at what it creates. Here is a real-world example with the parabolic SAR overlaid on top of a real-world price chart. The change in the position of the dots produces trade signals, allowing you to identify reversals early, but can also be used to exit trades. When the price of a pair rises, the dots also rise. The pace accelerates with the trend. The parabolic SAR works well for entering trades during a trend in a steady market, but may produce false signals when the price moves sideways. There are some pros and cons of the parabolic SAR. A pro or benefit of using the parabolic SAR is that it helps to determine the direction of price action. In a strong trending market, the indicator produces good results. Also, when there is a move against the trend, the indicator gives an exit signal when a price reversal could occur. On the downside, the parabolic SAR produces false signals when the price action starts moving sideways. Due to the lack of a trend, the indicator will move back and forth around the price, and this produces misleading signals. When a trader solely relies on the parabolic SAR during sideways market conditions, it can result in a lot of losing trades. To prevent such instances, traders should only trade in the direction of the dominant trend, and avoid trades when a trend is absent. Also, using other indicators like moving averages alongside the parabolic SAR can help prevent such losses. So as I said, you should use the parabolic SAR with trend confirming indicators. The average directional index momentum indicator, which is abbreviated to ADX indicator, will help to confirm the strength of an existing trend. Other indicators that complement parabolic SAR signals in a similar way include moving averages. For example, when price falls below a long-term moving average, it confirms the sell signal that is produced by the parabolic SAR. If the price is above the moving average, you should look to enter a buy position. You can also use the parabolic SAR with support and resistance. A very good parabolic SAR strategy is to use support and resistance levels given by the SAR dots. It requires a different kind of thinking. The support or resistance do not refer to the actual price, but to the SAR dots. The parabolic SAR indicator keeps a bullish or bearish series running, even if some candlesticks move in the opposite direction when compared with the primary trend. When using this strategy, determine if a trend is strong enough, then look for a minimum of 10 consecutive dots to signal the start of a new trend. The more consecutive SAR dots, the higher the chances the trend is strong, and the stronger the support or resistance level is. The start of a new trend is the new support or resistance level. The higher the time frame, the stronger the support and resistance. Although it is important to be able to identify new trends, it is equally important to be able to identify where a trend ends. To spot a trend reversal, look for more than 10 consecutive dots to form in the opposite direction. Keep in mind that support turns into resistance, and resistance can turn into support when broken. Next, we should look at setting risk and reward ratios when using parabolic SAR. Without a proper risk to reward ratio, your minimum should be 1 to 2, meaning your reward should be 2 times greater than your risk for a trade. Any trading strategy makes no sense. Obviously, no one knows beforehand if the trade will reach the desired target. However, following all the steps mentioned here, it will increase the chances that in the end, even if stopped once or twice during choppy conditions, the parabolic SAR strategy will reward you. Remember, define the support level as explained earlier, making the lowest SAR dot the invalidation point. The risk therefore is from the lowest dot in the support area to the entry point at the start of the bullish trend. Aggressive traders trail the stop at various SAR dots in the bullish sequence to make the most of the trade. Some take profits, the half of their profits, at the 1 to 2 level and stay in for the extra pips that may come. In conclusion, trend indicators act as valuable trading tools responsible for significant profits. All traders need to do is to understand how the indicator works and then look for the best way to use it. All in all, the parabolic SAR indicator is the source of many powerful trading strategies. Some traders use their parabolic SAR indicator together with an oscillator, like RSI. This way they make the most of both trending and ranging conditions. The support and resistance parabolic SAR strategy overcomes the ranging issue. If the dots have the ability to break the support or resistance, it means that the trend loses its steam and a reversal just took place.